Shades the Big Dipper stars constellation. Yes, July 2020 Market Watch monthly sales at 11,081 is a new all-time record for July. All-time. And you take a look at the pattern for March, down to a dramatic drop in April because of the COVID health pandemic. And the rebound since then, it's absolutely phenomenal. Out of this world. Hence the reference to the Big Dipper, which is in the universe. Now, if we take a look at the average prices, July 2020, another all-time record, exceeding the previous all-time record in June by $12,841 to a new all-time record of $943,710, the average price in the GTA for July 2020. Yeah, and that's during COVID-19 pandemic. Yeah, we've just entered stage 3 for some of the cities. However, we're still not out of the woods yet. It just shows you that the natural demand for housing in the Greater Toronto Area is so robust, it's exceeding artificial constraints imposed by the government, such as the B20 stress rules and the artificial qualification rate. And that being said, when we take a look, it's interesting to look at the absorption rate as well. The absorption rate shows how quickly homes are selling. And homes are selling at a faster pace now. In fact, the absorption rate decreased from 1.61 months to 1.36 months. That's a drop of approximately 16%. So that's, when you really think about it, it's quite phenomenal considering the pandemic. Now, when we compare it to the lottery market, recently a colleague mentioned, well, this market now is completely different than the 2017 market. And statistically, that was not correct. Because the 2017 market, which I did previously refer to it as a lottery market, it was a lottery market. However, what we have now is we have a pandemic lottery market, because prices are now 2.49% higher than they were at their highest point in 2017 lottery market prior to the B20 stress rule changes, which represents $22,919 higher than April 2017. And when we take a look at the number of listings has gone up, but they still fall short compared to previous years when there was a lot more listings. So again, constrained supply and pent-up demand. I mean, buyers want out. They've got enough cabin fever. They want to be creating their own autonomy. They want out from their parents' homes. They want their own places. They want to start their own families. That's natural. And pandemic has only paused that. It hasn't eliminated it. So now that we see more activity with people out there in the marketplace, the economy is starting to ignite on more cylinders, and it just makes sense. So keep that in mind if you're buying or selling. And we see it right across the board in all types of housing. So the competition, in essence, fueled buyers' competition, and it resulted in a further acceleration in year-over-year price growth. Now, the reason why the year-over-year price growth is not as relative as month-over-month price growth is because obviously it's a year removed. What's more relative? What happened last month or what happened last year? You see the point. All right, so homes now are selling for an average of in sold price in an average of 17 days on market. That's really rapid. So don't despair if you are buyers. There still are great opportunities there because remember, interest rates are at record lows. The rate that you're actually going to get, not the rate that you have to qualify for. So keep that in mind, and remember, stay in good terms with your parents, because definitely they can help you get into the market, because the sooner you get into the market, the more you're going to be enjoying these significant net worth increases. Talk then. Thanks.